Good morning, traders. Welcome to BCR's daily market analysis. The markets are responding to key economic data, geopolitical events, and trade tensions. We're seeing US dollar weakness, oil volatility, gold holding strong, and the Australian dollar bouncing back. Let's break down the fundamentals and technicals for today's session. The US dollar weakened after a brief rebound, pressured by geopolitical developments and economic concerns. European leaders' willingness to guarantee a Ukraine peace deal added to the risk sentiment. Despite PC inflation data meeting expectations, the dollar's recent decline reflects concerns over a slowing US economy, weak consumer confidence, and declining retail sales. Technically, the US dollar index faces resistance at 107 with further barriers at 107.66, which is the 34-day simple moving average, and 107.75, which is the 65-day SMA. The RSI remains below 40, signaling bearish momentum. On the downside, key support levels include 106.5, 106.15, and the 106 psychological mark. Crude oil, WTI, fell to $69 in European trading as investors reacted to Trump's new 10% tariff threats on China. However, tensions between Trump and Ukrainian President Zelensky over a peace deal with Russia created supply concerns, supporting oil prices back to $70. On the technical side, oil is attempting to recover with resistance at 71.32, which is a 25-day moving average, and 71.47, which is Friday's high. A breakout could target 72.72, which is February the 21st high, and 73.26, which is the 200-day moving average. However, if bearish momentum resumes, key support levels are 68.30, 68.5, and 67.50 to 66.80, where demand could emerge. Let's have a look at gold, which is recovering from multi-week lows, trading above 28.80 after bottoming near 28.33 last Friday. Concerns over US trade policy, weak PMI data, and lower yields are supporting safe haven demand. Meanwhile, escalating tensions around Russia-Ukraine conflict continue to keep gold attractive. From a technical perspective, gold has rebounded but needs to break above the 28.98 20-day moving average level and the 2900 psychological level for further upside. The RSI remains above 50, suggesting buyers are still in control. If gold clears these levels, 29.30 and the all-time high of 29.56 come into focus. On the downside, key support levels are 28.50 and 28.33, with a deeper correction potentially testing 2800. The Australian dollar rebounded to 62.50 after 6 consecutive days of losses as a weaker US dollar provided relief. Australia's TD-MI inflation data showed a monthly decline of 0.2%, reflecting slowing inflation, while optimistic Chinese economic data added support. Technically, the Australian dollar is still under pressure, trading below the 63.07 mark, which is the 9-day moving average, and 63.17, which is the 14-day moving average. A bearish death cross pattern suggests short-term downside risks. Key support levels include 62 cents, which is a psychological level, and the 61.64 mark, which is January's low. Resistance sits at 62.48, which is the 50% Fibonacci level, with a breakout opening the door to 62.86, which is the 38% Fibonacci level, and the 62.90 level, which is the 25-day moving average. Well, that wraps up today's morning market analysis. Keep an eye on the US dollar volatility, oil price swings, gold resilience, and Australian dollars recovery as the session unfolds. Stay sharp, manage your risk, and I'll see you in the markets. Happy trading.